Okay, let's get Monday started. The final trading day in the month of November. I am Bosun Omafaya, and this is Frontier Opening Bell. Welcome, everyone. Ali Kansacho, the CEO and founder, Rich Frontiers Management in Nairobi. Uchina Minis, who is the managing partner at WFC Markets, and of course, global strategies as well. Oyeka Ijoma, head of industrial goods analysis at Vetiva Capital. Good morning, everyone. Gentlemen, hope you all had a very great weekend. Thank you for coming through. Let's get the day started. That takes us effectively into the final month of the year with the markets. Round of the Nigerian market, 2.19% positive. Ivorian market, 0.75% green. Almost the same margin, about 0.8% in Egyptian stock market. And for the equities markets in Nairobi, that was a 0.30% decline. And South Africa on Friday finished 0.17% in the negative territory. Of course, the big story today for the Nigerian space, we'll get to that around the AfCFTA, but of course the East African markets, the projection for the year 2020, 1.3% for about 3% previous. Stanbic Kenya net earnings down 29.4%. Centum investment sales down 94%. Family Bank third quarter. That's a very big family there. I'm sure Ali is going to tell me how the family bank is making profit while others are in the negative territory, including the Housing Financial Group, the HF Group, whose sinks into net loss 730 million shillings, issues a profit warning. Ali, I'm sure you have quite a whole lot within the banking and financial space to talk about.
Absolutely. So we've just had a series of Q3 results here in Nairobi. But let me start with the central bank cutting GDP to 1.3% for 2020. This is after the World Bank cut GDP forecast for this year to -1%. So I think we're in this -1 to 1.3% if everything comes off well. Into the final few months, into December. I think it's going to be a negative full year print, particularly because of that second quarter, which was very, very soft. But, you know, we've seen some strength in the economy, in floriculture, horticulture, and in the farming segment particularly, which has underpinned the Kenyan economy. And really, we've all discovered the value of agriculture in the pandemic economy. With respect to the banks, just to go through some of the earnings you saw, Stanbic net earnings down 29.4% to 3.6 billion. Look, this was in line. This was within expectations. It's a resilient bank, a strong franchise. And I, for one, think it's probably a buy on dips, particularly because of the Sub-Saharan African franchise, which they leverage very effectively. Centum, this was a bit of a sticker shock for people, reporting a first half loss of close to $20 million. A number of things were happening on that balance sheet. Firstly, the previous year they had sold off an asset which had given them an extraordinary gain. So they were lapping a very flattering previous year. And also in terms of real estate, although they've taken in deposits, IFRS means that they can't treat that as bottom line revenue until the sale is completed. So there's also a quirk from that real estate perspective, which meant that earnings were suppressed. And frankly, I think they took the opportunity to throw everything into these half-year earnings because of the overall situation that we find them in. It looks interesting now, for sure. Well managed. They know how to trade in and out of positions, and they've kind of restructured quite effectively, I think. Family Bank, obviously, an outlier, bullish outlier. And this is an interesting story. I think there's a low base effect, but also there's the effect that they had a lot of problems earlier, a few years back, restructured, tidied things up, and I think they're reaping the reward of that restructuring and tidying up that they underwent. Housing finance, very disappointing, big hit. African Development Bank lending money for Tanzania's hydropower project. Egypt is building the biggest dam in Tanzania as we speak, and there's a big drive in the hydropower space down south. Just quickly touch on the politics. There's been a lot going on. Obviously, we've got developments in Tigray province, where the Prime Minister was speaking, Ethiopian Prime Minister was speaking this morning. On Facebook, I saw he said that the military operation was over, but the Tigrayans say they've shot down a plane. And I think we're going to have prolonged insurgency and guerrilla warfare there because of the terrain and the experience of the TPLF. And then here in the Horn, Somalia kicked out the Kenyan ambassador. Kenya is doing the same to their ambassador. And Ethiopia has also withdrawn their ambassador from South Sudan, saying that Sisi, who was visiting the South Sudanese President Kiir, was also meeting with Gebretsion, the TPLF here as well, and they're unhappy about that. So lots of activity going on.
Yes, it's becoming, we just hope it doesn't get messy, really.
Yeah.
I saw the Africa Reports magazine report over the weekend, and it's calling it the Africa's World War, taking place with Sudan, Ethiopia, Kenya, Egypt, and others within that space. Eritrea, on the other hand, Djibouti is sitting down quietly there watching what is going on with the UAE in. It looks like it's a whole tinderbox all over again for not for that. With South Sudan and Sudan problem not really resolved per se. So it's a whole lot of tinderbox just the part of the continent, and it's going to be a very big shame if it all spills down to more stable areas such as Kenya, down to Rwanda and others. It's not going to be very good business. Okay, thank you so much, Ali. Let's check into West Africa. For Nigeria, it's good news that tomorrow or yesterday, Sunday, the Office of the Trade Negotiator sent they went to Accra, Ghana to present Nigeria's certification of the AfCFTA to the team, which will be formally presented tomorrow, 10 o'clock Nigerian, 8 o'clock Nigerian time, 10 a.m. in Addis. Of course, no one is able to fly into Addis now. Nigerian team are not going in there, so the presentation will be done by the head of mission of Nigeria over there. This is great news because over the weekend on Sunday, Lesotho and Tunisia also delivered their own instrument of ratification to the AfCFTA. It looks like we're getting ready now for the final 30 days into the takeoff on January the 1st, 2021. What's the analyst prediction as far as OPEC meeting starts today? Formally speaking, at least for the big boys, that's about a 3-month production extension. Nigeria has asked to be granted a leave out of this production quota, which has been in place over time. The Nigeria's Federal Competition and Consumer Protection Commission, FCCPC, over the weekend released a comprehensive merger review regulations, the most comprehensive on the African continent, according to the Director General whom we spoke with yesterday. The banking sector, Stanbic IBTC, released news about its new life insurance subsidiary, just as the insurance sector consolidation is about to be wrapped up at the end of December. And Togo unveiled the first 5G network in West Africa. The first, that's according to Togocom, the communication telecom company in that West Africa. Let's get Oyeka in first very quickly on the AfCFTA news.
Yeah, thank you very much, Kwasim. The AfCFTA is actually very exciting. This is something that has been in the works for a couple of years now. We recall that first off, Nigeria started off a bit hesitant to get into the common market, and now it seems that we are one of the countries that are spearheading the push to kickstarting in 2021. Even some of the earlier barriers that we had noted, such as the closure of the land borders, looks set to be overturned now, as the Minister of Finance last week mentioned that we should be expecting an imminent reopening of the land borders in preparation for the January 2021 deadline. It does seem like we are heading for that start date. How it will impact trade within Africa is still up for debate, though. There's a lot that needs to be put in place, and the political will needs to be there across a number of countries. This is going to be the largest trade bloc since trade agreement since the World Trade Organization. No, since the World Trade Organization actually, considering the number of countries and the number of people that will be affected, and it seems significant. However, we know that it might not necessarily have such an immediate impact on on growth, on trade, because there's a 5-year period with which countries are expected to gradually reduce their trade tariffs within the continent, while the organization, the multilateral organization, sort of works out the kinks of trade within the space. It's broadly expected to be positive for all the countries, but we know that sometimes trade is going to be a zero-sum game, some countries are also going to, unfortunately, lose out in the short to medium term. In Nigeria, for example, we expect that in case of some heavy manufacturing equipment, such as cement, such as in the cement sector, we expect Nigeria to be broadly better off, based on this. Based on this, agreement, because we currently produce more than we need. We currently have capacity for more than we need in Nigeria, and we're currently trying to ramp up our exports, facilities to help accommodate, the agreement. However, in sectors like agriculture, we expect that we'll be worse off in the short to medium term, while we look to ramp up our capacity, our production capacity and our effectiveness and competitiveness across the sector. So,
for me, for Nigeria, as far as the AfCFTA is concerned, you want my honest opinion? Nigeria needs something to get the country out of its comfort zone. That is all I know. We've been in this comfort zone for decades, thinking that we are the center of the world, at the center of Africa, we can do no wrong, we're the big brother Africa, we got the demography, we got all of that. We got the oil, we got everything. Nigeria needs something to kick it at the back end and just realize it's a brand new world. That's that AfCFTA do.
I fully agree with you. The main, over the past 20 to 30 years, the main value proposition for investment in the Nigerian space has been the size of the population, and population growth rates. The AfCFTA effectively, theoretically eliminating borders across different countries, that tag of the highest population size will not necessarily matter anymore, given that you expect the bulk of Africa to become one major market on its own. Yeah. And so, in order to continue to grow at the rate that it has been growing in the past, Nigeria will need to become a lot more competitive, versus our neighboring countries. So I do agree.
I totally agree with you. So Uchenna is at WST Markets, and how do you think the OPEC group should treat Nigeria's request for an exemption? It looks like there's going to be an extension for 3 to 4 months. Nigeria is looking at oil prices now about 45. So folks are looking a little bit happy because the World Bank money is not coming in anytime soon, the way it looks. Should OPEC say yes?
I think what Nigeria is asking is basically they're asking more than they can chew. Nigeria is one of the leaders for the laggards in the past 3 to 4 months, given their own production cost quota. They've not met it, and the request to be exempted is just trying to formalize their reason not to meet their production quota, and that's where the problem is. I don't think OPEC is going to listen to that, and it looks like Nigeria is taking the rest of the committed member countries for a ride, given the fact that we are also a significant producer of oil. But the reality is the reality. The reality is that we really do not have any significant source of FX at the moment, and we actually do need that exemption because of what the pressure we are facing when it comes to our currency, the naira. So I think that is where the problem is. Really, there's that gray area, given the fact, and if OPEC even disagree, the reality is that practically we can't actually meet the quota. So that's very where the thing is, and I think it's just going to be a chicken and egg situation, and what OPEC has sort of suggested to laggards like Nigeria is that okay, there's this particular quota you can comfortably meet, but rather than you running it for 3 4 months like member countries, you are going to do 6 to 9 months. So you are going to continue to cut for a longer period to just make up for your own fallout or deficit as a brand.
Interesting. Thank you for bringing the OPEC story, one of the biggest story on the continent for oil-producing countries this week. Of course, news coming through this morning is that in Ghana, the authorities are looking for a certain amount, about $160 million oil money that is not accounted for. The Office of the Transparency and Accountability, whatever, says they can't find about 162 million US dollars oil money. I think the virus with the oil production is creeping across, which is symptomatic of Nigeria. It's now in Ghana, where the Office of the Director General says they can't find 160 something million US dollars. Ali, you don't sit down there and be smiling in Nairobi. As soon as you guys start producing oil, you start looking for the money.
I think given the current price structure, I think those dreams of oil in Lake Turkana are largely dashed. I think that realization has seeped through into the policymakers. And essentially the trigger for that for us was when Total bought the Albertine Basin assets of Tullow and left Turkana. So yes, very difficult to see. They say that, they're calculated on the basis of $50 a barrel. And given where we are now and it being so marginal, it's not worth it. So I think that dream has been dashed.
I see. Okay, let's talk about Southern Africa. It looks like the South Africans within some of the data we saw last week in terms of business confidence looks like something is going up. Business confidence for November went up to 40 from 24 for South Africa. That looks like a big news. But of course, we're looking at the Botswana's interest rate decision this week. Anytime this week that is going to happen. That's one news. It looks like throughout last week, all the Pan-African SSA's central bankers left interest rates largely unchanged. So that's one story that everyone is following through. Then, of course, within the Southern African space is a couple of corporate news from FirstRand. South Africans retailers now getting a whole lot more creative. They want to turn their back on China. They want to source materials locally. That should help the South Africa's textiles industry. The Ethiopians seem to get a hang of that when they got slapped with higher tariffs by Washington. They look for markets elsewhere. Then they reported a better than expected numbers. Zimbabwe's economy will grow more than 7% in 2021. That's according to the finance minister, Mthuli Ntube. This is going to be a very sweet story. Kenya 1.3%. Zimbabwe is looking at 7.4%. I don't know. Help me out, Ali, quickly.
So the Zimbabwe story obviously is very interesting. Mitsui Cube has been extremely bullish. He's probably the most bullish finance minister anywhere in the world at the moment. Tendai Biti in the opposition, but also a financial wizard who, of course, did all that good work in the unity government in 2008. Is highly skeptical that Zimbabwe can reach these sorts of numbers. I think, you know, Zimbabwe is such an experiment in the sense that it's been sanctioned. It's kind of become a very autarkic economy, self-reliant, has a tremendous agricultural sector. Maybe he'll get to that rate if he gets good rains. Then, of course, all bets are off. But I think, you know, a lot will have to do with the weather as well. And then we'll see. But it would be quite a miraculous outcome if he can post 7.4% in 2021. I'm sure it'll turn out to be the fastest growing economy in the world. Botswana rate decision, they've already cut quite dramatically. I think, you know, we've spoken about this before. Easing rates at this point is like an elastic band. Is it having an effect? You know, is it stimulating demand? I'm not so sure. I think a lot of these sub-Saharan African economies have done as much as they can on the rates. Nothing like yourself, close to zero, but I think that's about right. NAMPAC, obviously big in Angola, big in Nigeria. Both Angola currency particularly has been under tremendous pressure. So translation losses happening there. FirstRand half-year profits could drop up 25%. Look, in the current economy, bank profits dropping 25%. Is frankly not a bad outcome.
Thank you, Ali. Let's get back to the Nigeria market. Currency was the big story last week. Exchange rates. The central bank governor was all over the place on Tuesday with the monetary policy decision, and on Friday the dinner with the bankers, the final one for 2020, and it had very strong words for analysts, for all of us who talk about the currency, the exchange rates, the whole issue. Then the central bank adjusted the numbers slightly, as it were. I'm sure you took note of that, in a minute.
Yes, I did. But I saw it. I saw his emotional outburst. But I think when you are in such position, you need the optics, you know. And I think he had to do that, you know. but when you play in this market, you realize
is the man on fire right now, according to Denzel Washington.
Right. There is the reality and there is the theoretical angle of things, and I think that's where he's been caught up, you know. And in short, I think after that outburst, we saw the weakening of the naira. Basically, it's saying highlighting that you really think what you're saying is the reality, and we saw that in the market space. Really, the parallel market is, as much as it's unofficial on a very should I say on technical monetary basis, the fact is it really determines the supply of most of the US at the moment, really, you know, and once the central bank can have a strong hold of our own reserve when it comes to the FX, that all just has that ripple effect. It's almost automatic, you know. And when you have conversations with stakeholders in the manufacturing space that needs to actually legitimately source this USD, they tell you even what they had to do to get through to the to the supply side from the central bank, that it is really not available at the moment. And we now go back again to our oil sales, and at the moment with the production cuts, I'm trying to just mitigate all this risk. There's too many variables going on right now at the moment when it comes to currency, and it still boils down to one thing also, and that's it is the fact that we do not have any other viable outlet to get that FX inflow. That is basically what it is. And until we change that, we'll always be we will often be caught in places like this where any global shift or global risk materializing can just take us to a recession in a couple of months or a couple of quarters.
We're always between the deep blue sea and the hard rock place, always in that tight corner. Again, we can have this conversation for a whole day, but I'm going to allow Oyeka Ejema to give us just about a minute or so of what he thinks this latest FX adjustment. We spoke with the central bank deputy governor in charge of monetary policy over the weekend, and he said it was a slight adjustment. This will be about the third this year. We saw the other two around May and June, July, isn't it?
Yeah, I think yes, this is around the third adjustment. Fourth if you count the adjustment for the BDCs also. Um, so we've had a number of these adjustments, and the truth is that there's like we said last week actually, the CBN is currently struggling, with meeting FX demand in the country. The World Bank loan that we had expected to help ease the burden on the CBN just seems like a pipe dream at the moment. Even though the Minister of Finance is, sounds largely optimistic on it, the
body language from
the body exactly is a little different. So it's not expected. Coupled with the impact of higher demand in the festive period, we're definitely seeing a lot more demand for the USD, and the CBN. The truth is the CBN cannot keep up with the current reserves that they have.
There's also the year-end demand for those who want to travel, those who want to pay up on a whole lot of
Exactly.
companies want to pay up for third parties and what have you. So
exactly, I myself am on the queue for some other things, and we can definitely tell whether from personal experience or from looking at the numbers that where we are at currently is not very sustainable this thing. And there are lots of analysts who expect that this will not be the final devaluation in a 12-month period, and we'll probably see there's still a high risk of another one in the near future.
okay, I'm sure the World Bank looks like very uninterested now in giving anyone any easy money, as it were. They gave a tough note to South Africa. I'm sure they issued a similar one to Nairobi, the Kenyatta's administration as well, isn't it, Ali?
Yeah, I mean, I think, we're underestimating the envelope that the World Bank and the IMF actually have. And I think, after that initial effort, which was really to pump out cash quickly, they're becoming a lot more
reluctant.
Yeah, so I think, the assumption that there was going to be piles and piles of free money available, I think was an incorrect one.
At least and unfortunately for some of the sub-Saharan African sovereigns, once you go below Egypt, it looks like it's getting a whole lot. The three biggest economies in Africa are not getting easy way out of the World Bank: Kenya, Nigeria, and South Africa. And that means a whole lot, by the way. If you consider that these are supposed to be the three biggest economies that's getting all the support that the World Bank should be giving them money left, right, and center, like you said, the envelope should just be going. But it looks like the folks in Washington are not really that keen. So they're tightening the noose on fiscal authorities. They're asking Kenya, for example, to reduce public wage. South Africa not to pump money into ESCOM or South African Airways, the wage bill that hasn't been reduced. Nigeria hasn't been able to do that sustainably as well. Public debt is rising even in Ghana, now about almost 71% of the GDP. So it looks like the mindset, the mood in Washington has changed, not with the pandemic, by the way. They just don't want anyone to take this money, pay salaries of government and political office holders, and then life just move on by 2021. Finally, in North Africa, what do we have around some of the corporate news? Yes, sugar producer consumers revenue up 2.7%. That's in Morocco. The LafargeHolcim third quarter turnover down 8%. And Egypt's national banks get 1.87 billion funding from France. I just talked about that. The Egyptians seem to have a way of dipping their fingers in everybody's pockets. Even the French. Ali.
I came across a very interesting article by Professor Michael Tanchum. He might be worth getting on your show. And he was basically looking at the Mediterranean economy, North Africa and Southern Europe, the connectivity, and basically outlining the amount of money that was being piled into these North African economies. And essentially, I think France has been investing in North Africa with the Emiratis and with Saudi Arabia. And I think and that alignment is with Egypt. And therefore, this is why we've seen European multilaterals support Egypt because it's a geo-economic decision, I think. But it speaks to the Egyptians. As you said, they can pick anyone's pocket. They're really very talented at this. So congratulations to them, because one thing they've not been short of is capital in terms of building on the recovery after the massive devaluation.
I know. Congratulations to them. Thank you so much. And thank you, everyone. My panelists this morning. Thank you so much, Alikan Sachi in Nairobi, Onyeka Ijoma from Verteba Capital, and from WST Markets, the global strategist and the managing partner, Uchenna Minis. Thank you so much. Have a great Monday and have a great week. We'll see you again in December, or just tomorrow morning.